Welcome one, welcome all. My name is Trent. If you're new here and you find this information useful, please like, please subscribe, and all that corny YouTube stuff. We are looking at, for the weekly, on the sector performance on the S&P 500, communication, consumer discretionary, industrials, and technology were down. Why does this even matter? Well, really, I am just looking at this to find out if there was rotation from the tech and semiconductor sectors into other sectors to help me determine what kind of sell-off we're facing, right? And as you can see, consumer staples, energy, financials, healthcare, materials, real estate had some money put into them while these other sectors sold off. It may not have been a significant amount, but the point is there was some rotation out of tech into other sectors. So we're not selling off on every sector, which would be a major red flag. So that is why we look at that. And next, we're going to take a look at SPY. Here we are on a SPY weekly chart. If we were to draw a trend line from down here, from this gap to the top, would this week's red candle violate the trend? I say no. Um, so on the weekly chart, we are still in a perfectly clean uptrend. Nothing too alarming going on here. If we were to think of this as the monthly chart, I would say as long as we were above this 610.97 level, we would be fine for a monthly uptrend. The only way that this becomes a concern is if we fall back below this 653.50. These like four candle bottoms right here. If we were to go below that, then there would be concern for further downside. But as we are, where we are, I see no concern. Let's switch on over to the daily chart. On the daily chart, the ideal higher low would have been at the top of this kind of flat top area over here, around 673.75 or something like that. Obviously, we sold off deeper than that. Um, and that became somewhat of a concern on the smaller time frames. However, once we hit the 50 SMA on the daily chart, you can see clearly buyers stepped up. We have a nice hammer candle on Friday's candle, and that candle really it doesn't get much more bullish than that. So let's take a look over at some market internals to see if we can gather any further clues as to what to think about what happened Friday. Well, look at the volume outflow down here in the bottom left on Friday. 500 or greater than almost 600 million shares to the inflow side. So that really says that buyers really stepped up at that 50 SMA. I mean, they really started pouring in. So that is a definite good sign as far as that goes. On Friday, as far as time spent above or below on tick, 50-50. Um, See if we can gather anything else from the tick. I mean, it did go straight down, but recovered right back to zero. So, so that's what we can gather from that. ADD, no extreme readings, no extremely high readings. So still just kind of tells us that there's just a few semiconductor AI stocks really ruling this market is what ADD's kind of telling us. And now we will go back to the SPY chart and look at the hourly levels and see what kind of paths we can work out for the coming week. So, looking at the hourly chart, if bulls are gonna win here and the uptrend continues, what we want to see is a break above 673.45 here, and then a higher low above, showing price acceptance. Then that would be, in my opinion, a good spot to enter long. How might we get there? If we were to open at the same price we close at on Friday, I would say the best way for us to get there would be a pullback to 669.6, buyer step up, long up to 673.45 or whatever. And then that becomes a battleground. Do sellers win it or do buyers win it? So if that level is rejected by sellers, then I would expect a lower high coming back down short. And then you would just go level to level short down. So the moral of the story here, 673.45 is the key level. Higher lows above for longs, rejections for shorts. Okay. Let's go ahead and take a peek over at QQQ. We'll switch to the weekly chart since it is the weekend and after the end of the week. You always want to take a look. Did we violate this bottom trend line on the weekly chart? No. Where does concern drop in? Below 589.50. If we got below that, there could be concern for further downside. Something else you want to think about with when the market's going to crash, when there's big sell-offs, almost always we will see some type of double top or some type of reversal pattern on the weekly chart before it happens. We do not see that on this chart, so I do not have concern. Yeah, we had some selling pressure, and all these people are talking about the AI bubble pop. We're not there yet. I say we are just simply not there yet. Not a chance, not yet. Let's switch over to the daily chart here. Zoom in a little more. The ideal spot for higher low would have been between 612.50 and 611.35. Obviously, that didn't happen. But the next ideal thing would have been buyers to step up on the daily 50 SMA. That did happen. We got a nice bullish hammer candle again, same as SPY. So, key level over here, just like on SPY, over here it is 612.50. If we catch a bid above, get a higher low above, I'm getting long. If we reject anywhere between 611.35 and 612.50, I'll probably get short. But I'm going to respect that 50 SMA when we come upon it again. So, taking a look at the hourly chart, how do we get there? Well, if we opened at the same spot on Monday, pull back to Friday's opening print, 608.35, get a higher low, then we get up to that key level. Um, so 612.50 is obviously the key here. What if we didn't even go to that level? Well, lower highs below 675 for shorts, and we never get to that key level. But I'm willing to say probabilities favor us testing that level. It has been a couple weeks now where I've been bringing up that we had bad breadth as we were gapping up to new all-time highs, and that we had some bearish signals over in junk bonds and credit spreads. So this is junk bonds. We have this big gap above us. We do have a potential like reversal pattern on the bottom here, inverted head and shoulders. If we can get back into this gap and start filling it, then that would be a very bullish data point to carry forward over on SPY and QQQ that we're heading back up. Taking a look at LQD, which is corporate grade credit spreads. Um, we also have potential some type of reversal pattern. We did gap up on Thursday, and actually, no, that isn't even a gap up. Kind of looked like it from the close, but it's not. Let's take a look at the daily chart on this one. Hmm, if we can start closing this gap above on 110.95, then that would also be a bullish data point for SPY QQQ for the market in general. If we start heading back down to these levels, big red flag. So just something to pay attention to. I think the first chart that we'll take a look at is Microsoft, which has just been selling off like all crazy. Before I say a word, do you see the big red flag here on Microsoft? I'll give you a minute. There's a big old double top. The neckline is down here near 494.55. Any lower highs below that will confirm this double top, which is obviously bearish for Microsoft. But if I come over here and look to the left on smaller time frames, I really am not a big fan of this price action right below 494.55. Let me get some more time out here to see if I can kind of show what I'm talking about. Yeah, I'm not a big fan of trying to trade through this junk over here on the left. Or wait, that's not even it. Let me go further left. Oh my, I need more time. Gosh, 180 days. Maybe that's enough to see it. All right. So I'm kind of zoomed out, but this isn't the cleanest right here. It's not terrible, terrible, but it's not the cleanest. And I am really putting a huge focus into only taking A plus, maybe B level trades, but really only A level. And I'm sorry, I'm just not trading through any junk. It's not worth it to me. It it I like I'm if we just focus on taking A plus setups, that's the path to success. Believe that. It's taking all these terrible setups that lead people to ruins. So lower high below this does confirm the double top, but cleaner trades don't pop in until 490. So I am interested in lower highs below 490 and trading short all the way down to 480.50 and possibly even a little further. If I am trading short Microsoft though, one thing I will mention, if and when we get to this 200 SMA, I would definitely not trade short into that thing. That is definitely a level where hedge funds, big funds, like to pick up shares, and we saw it on Friday with QQQ and SPY and others on the 50. You didn't want to be short into that thing. So, long story short, lower highs below 480. I am looking to go short on Microsoft. There is nowhere anywhere near that I have any interest in longs on Microsoft. Uh, well, maybe a look below here and a fail, and then a higher low back above. That's not going to happen in one day. So nothing to be concerned about at this time. All right, we're now looking at NVDA on the hourly chart. The path that I see is the most probable is a pullback to 185, buyers step up, and then long back to 186.75. That becomes a level where sellers could potentially step back in, so I want to use caution. Um, or they don't, and it keeps going long. So the what I would like to see here is a pullback to 185 and then a continuation back long and then get above 190.6, higher low, back long, and we seek new all-time highs again. It should be fairly simple to zip back through this stuff. The structure's pretty thin. It was thin going up at the first time, thin coming down it, and it could be simple going back through it again. The other path that I potentially see, if we get back below 185, then that becomes a threat of a look above and fail. Look back up, because we are back inside this range over here. We have now broken out of it again. If we go back inside of it, any lower highs below that are good for a short, at least down to 179.75, but you don't want to be short into the 50 SMA. So you got to respect that. So maybe lower highs below the 50 SMA would be safer on the short side. Otherwise, we're looking for pullback longs off 185, possibly 186.75 to continue back higher. We are now looking at Google on the hourly chart. As you can see, we've made an attempt higher. Now we're kind of stuck in this bounce range between 276.65 and 287.15. The base case here is that we're going to stay inside this bounce range. Attempting to take trades outside the bounce range comes with great risk. You can see it dipped outside of it 1, 2, 3 times on Friday on 3 separate hourly candles and failed to move lower. So you got to really be careful with these setups. But if it breaks below, comes back up, gives a lower high below the 276.65, and market conditions and things line up, that is, maybe the market's pulling back at the time, etc., or that the market's bearish in general, come down, lower high below. We could take that short damn near all the way down. It has thin structure from 276.65 all the way down to 256.60. That is all easy stuff to get through in the right bearish conditions. So that could bring a massive short opportunity under the right conditions. If the market's going to start selling off again, I would have an alert set here in case Google breaks down. That is that. Otherwise, if it came down and then, if it came way down here, came up, didn't get the lower high, then came back into the range and gave us a higher low, that would be good for a long, probably to the other end of this bounce range on a look below and fail setup. The other way I could see this playing out, a higher low above 287.15, using the same caution, understanding that it failed before. That's why we wait for the higher low. That's why we use market internals, so that we don't get faked out on stuff like that. Higher lows above 287.15 target the all-time high. Higher lows above the all-time high target the overnight all-time high, which is all the way up here at 298.90 and still needs to be repaired. I think next we will take a look at, how about Amazon? Okay, Amazon has sold off into some of this gap after this parabolic gap up. It stopped perfectly on a previous all-time high level over here, right at right around 238.50, something like that. Gave a nice hourly candle. Buyers have stepped up beautifully since then. So what I'm looking for is any higher low above this hourly level here at 245.50 to continue back long once we break this little high here, higher low above to continue back long on Amazon. It's a really decent setup, definitely one to watch out for this week. Otherwise, if everything fails, lower highs back into the gap for more gap fill. You would want to watch out for any levels inside that gap, which I don't have marked out right now. So the base case is we get back above 245.50, higher low above, continue long on Amazon. Next, we'll take a look at Meta. Meta has been another one, kind of like Microsoft, but even worse, that's just been selling off and selling off. It's well below the 200 SMA, and my lines are missing. What is going on? I have to pause for a moment. Okay, super frustrating. I've lost lines on several of my charts tonight and have had to gone through and redo stuff, and regardless, here we are. So on Meta, the only potential trade I could see right now, maybe it rejects 622.15, comes back down to 604.38. I am not looking to take any longs on Meta unless or until we get some type of reversal pattern, whether that be a double bottom, a inverted head and shoulders or whatever, and then we get above the neckline with a higher low. If and when that happens, I will consider longs on Meta, or and possibly if and when we get above the 200 moving average. Until then, I would not consider it at all. That's the one potential maybe setup I see on Meta. Moving on, we will take a look at Datadog. Okay, Datadog has this big gap up, and now it's kind of making this bull flag. What I would like to see on Datadog is a pullback to 186.50. Buyers step back in on that pullback, take it back long, targeting 191.60, possibly higher, but for now I would just look for a pullback, 186.50, long back to this 191.60. That is it for now. I think I have to go through all my other charts and see which ones are missing my lines and put them back in. Super exciting. But this is all the charts I had that had clean setups on them. So if you feel like I skipped certain Mag 7s or whatever, it was because I didn't feel like there was any real clean setups on those charts. Price wasn't anywhere near where there was going to be a clean setup. If you're not journaling your trades, please do journal your trades. Use a journal that can help you get get expected value on certain different setups and things and elements of trades. Strategy Forge Journal can help you with that. That's strategyforgejournal.com. Use code strategy, get 6 weeks free. If it doesn't help you improve your trading, then just simply cancel. It is as simple as that. There is a cancel button inside the software, and you just hit cancel. That's all you got to do. All right, have a good one. I will see you on the next video. I'm out.
Always one pip away!
There I was, a struggling trader.
Climb, baby!
Always on the edge of almost becoming profitable, but still making the same mistakes day in and day out. My mom
When are you gonna
always
grow
nagging
up?
at me.
Do something with your
Finally,
life.
I discovered technical analysis wasn't
I've
the
been
problem.
doing this for years.
Trading
I know it's
psychology
not gonna
books were
work.
not the
I need
problem.
better
I was the
self-discipline.
problem. I wasn't tracking my data and using it. This kept me in a losing loop. Then I discovered Strategy Forge, a journal that had custom tags, built-in artificial intelligence analysis, strategy playbooks, smart goals, and all the analytics I would ever need. Finally, I could afford that diamond grill I always
From
wanted.
Edge Dweller to Bling Boss, StrategyForgeJournal.com.
Use code STRATEGY for your first 6 weeks free or 3 free months on an annual plan. Act now. This deal won't last forever. Go to StrategyForgeJournal.com. That's StrategyForgeJournal.com and use code STRATEGY.